Today we'll do it a bit differently. We'll dive on to the topic right away because I found learning points that I'd like to share with you. And an article in particular is going to help me deliver that message that you should hear. This article's title reads, Singapore Investment Bloggers Review Their Top Picks for 2021. I'll go through their points as to why they've made that selection, and I'll also show you the share price year to date. As of this time of filming, this is 24th November, so the data is definitely accurate. And without further ado, let me show you how the thumbnail actually looks like. And the first name on that list is actually Link REIT. The justification for buying Link REIT is quite obvious. Link REIT's properties are value accretive. Their dividends per unit has grown from 22 cents Hong Kong dollars in 2006 all the way to $2.87 in 2020. Not only that, Link REIT also hosts high quality neighborhood retail malls in Hong Kong. And they actually have a 100% dividend payout mandate. So if we look in terms of share price, you'll see that Link REIT is right now trading at 1.5% below the price in 4th January 2021. Let's move on to the second name suggested, Manulife US REIT. Manulife US REIT has actually a healthy occupation rate of 94.3% in third quarter 2020. And not only that, they have actually a pretty long weighted average lease expiry, 5.5 years. And a very strong point to note is their forward distribution yield is closing in on 9%. If we see the share price for the year to date, Manulife US REIT has actually lost 1.3% year to date. Let's move on to the third name suggested, which is Centurion Corp. Centurion Corp is actually in the business of making dorms, and what is mentioned is that the price to earnings ratio is 3 times and the price to book ratio is 0.5 times, way below historical average. The dividend yield for this company is between 3 to 6%. So for Centurion Corp, the performance year to date is minus 6.9%. Let's move on to the fourth name suggested, which is Square. Square is listed in US, and some of the key justification points are that Square has doubled its operating cash flows from 2017 to 2019 alone. In addition, Square is actually a business that can transact Bitcoin and that they have been actually delivering recurring revenues. In terms of share price, Square's year-to-date performance is minus 4.8%. And looking at the chart, there were periods in time whereby Square's share price was as high as plus 25% year-to-date. But as of this time of filming now, it's minus 4.8%. Let's move on to the fifth name, which is actually Trip.com. The justification for Trip.com is obvious. They are China's largest online travel agency, holding 60% market share. Not only that, they've actually bought over Skyscanner. If we look in terms of share price for Trip.com, listed also in US, you realize that it's at minus 12.6%. Now let me pause a bit over here. You realize that from the thumbnail, which I'll bring up again for you to see, the 5 listed there have all lost year to date in terms of share price performance. But my point is this, I'm not going after the bloggers who have suggested these names. In any case, I see them as colleagues sharing financial information, and many of them are very qualified. What it reinforces in this exercise is no one knows the future. That includes me also, and when I get things wrong, I don't want things to be thrown in my face also. I understand that. And this whole exercise has been very humbling because if 5 of the best names have gotten it all wrong, it really reinforces that Mr. Market is not someone as easy as he seems to deal with. But let's move on article. There are further recommendations to share with you, and I'll actually give you my 5 learning points that you can bring away from this discussion. Next in the article is actually Mapletree Commercial Trust. Mapletree Commercial Trust, the justification for it is that VivoCity is expected to steadily increase its net property income contribution as the situation recovers. As of now, Mapletree Commercial Trust share price is about 15% below the peak. It is well run and it owns high quality assets. If we see in terms of share price, Mapletree Commercial Trust has gained 0.9% year to date. Fantastic. Finally, we have a gain, a recommended gain. But 0.9% is actually a very meager amount when we compare to some indexes which I'll show you in a quick while. Let's move on further on the article. Next up on the recommended list is Mercado Libre. Mercado Libre is actually a Latin America e-com company. Online retail penetration there is expected to hit 10% this year, twice the figure pre-COVID. And as we see in US and China where e-com is growing very quickly, Latin America is very obviously the next frontier. If we see in terms of year-to-date share price, Mercado Libre has lost 21.6%. This is quite possibly the biggest loss from the list we've compiled so far. Let's move on a bit further. Number 8 on today's list is actually Trade Desk. The reason for recommending Trade Desk is that revenue has been growing 48% a year over the past 3 years. Net income has actually grown at an impressive rate of 74% over the same period. If we look in terms of share price for Trade Desk year to date, it's gained 32.8%. So finally, a big winner from the entire list. But there's more. There's some wisdom to saying that hindsight is 2020. Let me pull up a company that has way outperformed Trade Desk if we have 2020 hindsight. That company is quite obviously Nvidia. If we plot Trade Desk gain versus Nvidia gain, you realize that they are worlds apart. 142% gain by Nvidia. Now let's plot Trade Desk against some of the popular names that you see on YouTube or on other social media platforms. They include Tesla, Palantir, and Alibaba. And what you see in this chart is a huge deviation in terms of performance between these 5 excellent companies. But let's draw back to our article today. Let's plot the best performer against the worst performer. Trade Desk versus Mercado Libre. How does it look like? If you see over here, Trade Desk has done 32% plus and Mercado Libre has lost 21.65%. Take for example, you bought both of these companies because you went for the recommendation and you own all of them until right now. What is your total portfolio return? If you put $1,000 each, you would have $2,110 thereabouts. That gives you a gain of about 5.5% only. Now take note, 2021 is actually a good year on the stock market. This is by no means a bear market. If in a bull market, the returns are only 5.5%, what will it look like in a bear market? And in this period, Nasdaq has gained more than 20%. What about STI? STI has actually gained 8%. So STI being often ridiculed as a small players market has also delivered year-to-date 8%. A portfolio whereby you own both these excellent companies will only give you 5.5%. That leads me to the 5 points that I'd like to share with you today. The first point is this. When you come across causes or gurus that promise you a method to invest or trade that can give you excellent returns, think twice about it. Our 8 bloggers are highly qualified. And if we use the best and the worst and we average it out, we realize that the net return is unspectacular at all. Advertisements that promise you a secret, whereby once you learn their method of trading or investing, you're going to get to your financial freedom. They are not likely telling you the truth. That is why in their student base, where some have succeeded, there are many others that have continued to flounder. If you agree with this saying, help me smash on like button. Let's move on to point number 2, which is this. On a 1-year time frame, it is just a wild guess. I've seen before on forums people asking, should I switch robo portfolios because this portfolio is not doing well? Might as well I go to the other portfolio. Or that this fund is not moving, I rather switch it out. And with that, I'd like to try to help you understand a scenario. You know, in life, when something is not working well, you should make changes. For example, you want to lose weight. You go running 5 kilometers each week and you realize you're actually not losing weight that much. Maybe if you change it to swimming every week or you change it to yoga, you can get more effective results. But on the other hand, when investments are not doing well, you should not jump to conclusion to change so quickly. But before that, I'm also stressing that if it is bad habits you're practicing, you should change them. If it is wrong strategies, you should refine them. The reason I'm saying that when an investment is not doing well, you need to have patience on it is because in the investment world, you do not control the outcome. You do not control the prices. When it comes to, for example, losing weight, you have absolute control. You can test whatever you want to see what your body reacts the best. But the market gives you a price. You are a mere participant and the market does not care about your special secret or technique. So again, on a 1-year time frame, it's a wild guess and always have patience when you make your investments. Let's move on to point number 3, which is you can actually buy a great company at a wrong timing. In this article, all these 8 companies, I have no issues with them. They look pretty outstanding. But let's use an example again with the best and the worst, which is Trade Desk versus Mercado Libre. Let's hypothetically say this idea whereby on 23rd of September, an investor who has both of these decide to make this stupid decision, which is sell away Trade Desk because it's done nothing, if you see the blue line over there, and buy Mercado Libre, which has gained close to 20% as of September 23rd. That means that the investor moved his $1,000 originally, because now it's still about the same price as what he bought. He moved it all to Mercado Libre. And fast forward to today, 24th November, his portfolio will actually not be minus 20%, as you can see in the yellow line over there. His P&L right now will look closer to minus 30%. Why so? Simply because Mercado Libre on 23rd September was a high point. From then on, it has came down more than 30%. And point number 3 actually ties in with point number 4, which is other people's investment journey is not yours. This has profound impact on how you consume the ideas that are presented to you, including for myself. You know, everybody has a different investment time frame, a different patience level, a different tolerance for losses, which means a qualified investor who has bought Mercado Libre is looking at 10 years. And if you are looking at different time frame, you might experience a journey that's going to disappoint you. So as always, practice investing long term. Help yourself look long term and not see and make 1 year decisions. And last but not least, point number 5. When you make your projections for your investment returns for your own retirement and financial freedom calculation, I would like to suggest to use 5 to 8% only. That is a number that I use for my private clients, and a simple reason is this. This whole exercise has shown you that investments have ups and downs. Having a few mistakes will easily derail your investment performance. And many at this point of time are projecting 15 or 20% per annum to grow their monies, and that is actually very unrealistic. Let me give you some numbers. If you have 100,000 today, if you are able to grow for 20 years at 20% per annum, do you know what figure you end up with? You actually end up with $3.8 million. Do you believe that or not? That without doing anything, your 100,000, because you projected at 20% per annum, you get to 3.8 million and solve all the financial freedom obstacles that are in your way. That is why on this channel, you never see me put thumbnails that this stock will 10x or 20x. It can happen, but that gives actually a wrong expectations of things. And what I want to share with you is always good investment principles. So hopefully you've benefited from this video. Smash on like button again and press on subscribe, especially if you want to know more about proper retirement planning concepts as well as investment principles. And I'll leave you with some excellent videos I've done before. And in any case, if you're looking for someone to help you on your retirement planning journey, look out for my links below. I should do one-to-one financial advisory work. With that, I'll sign off from here and see you in the next video. Take care and goodbye.